Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Luke A., Jeff S., Mark R., and Jackie A. On the program today is a returning guest back to update. Mr. Jordan Trimble is on the program with us. Jordan is the president and CEO of Skyharbour Resources. The company is focused on uranium project advancement in Canada's Athabasca Basin through a dual strategy of in-house project advancement with its core projects at Moore Lake and Russell Lake, which include major partners Rio Tinto, Orano, and Denison. Skyharbour also has a prospect generator strategy where it holds an extensive collection of exploration projects that are being advanced by junior partner companies throughout various areas of the basin. Skyharbour Resources is listed on the Toronto Venture Exchange under the symbol SYH and also on the US OTC markets under the symbol SYHBF. Mr. Trimble, welcome back to the podcast.
Thanks for having me. It's been a little while. Very much looking forward to catching up. We've got a lot to talk about.
Yeah, Jordan, great to have you back on to update. And it has certainly been a while since you've been back on to update. And of course, the company's been busy. The market's been busy out there as well on various fronts. Well, why don't we start off here with just you giving us some of your brief thoughts on the uranium market here so far in 2025 and how you're seeing things out there, given that we're about halfway through the year already.
Yeah, no, look, it's been an interesting last 12 to 18 months. Obviously, I'd say the underlying theme there has certainly been volatility over the last 18 months. It's been a bit of a roller coaster ride, but I think things are lining up very nicely for a very strong end to 2025 and into 2026. If you look at obviously the commodity price itself, the spot price, dipped below $65 a pound. It's since recovered a little bit to about $70 a pound, but nowhere near what I think would be a fair market price for it. The long-term price has remained steady at $80 a pound, although that's an interesting talking point right now. Is you just had a long-term contract signed by CGN. It was with one of the Chinese state-owned utilities, but they signed this contract. It was 30% fixed term pricing at $94 a pound. So, even that $80 a pound term price, which represents the lowest fixed price set in the previous month. That I think too is probably not again the fair market price currently. I think we're going to have to see this stagnant utility mining relationship and situation that we have right now come to an end. The utilities are going to have to start bidding up and basically being the price takers. I don't see many producers or near-term producers selling any meaningful amount of pounds at either $70 or $80 a pound. And so I do think we're going to see that change here. The biggest drivers for this commodity, we've seen a lot of kind of positive headlines with data centers, AI, and the nuclear industry. We've seen obviously news out of the U.S., which is quite significant with the executive orders in the last few weeks. And these make for great headlines, but I think it's always important to emphasize the underlying fundamentals in this structural supply deficit that's formed here to the tune of 10 to 30% of the market. So when you have a demand of, call it 190 to 200 million pounds of annual uranium demand, and that's in the backdrop of primary mine supply currently of about 150 to 160 million pounds. So you're looking at, call it approximately 30 to 50 million pound primary mine supply deficit. That's a serious structural supply deficit, and the market has not yet priced that in. That's going to be, I think, a key driver over the coming years as again utilities wake up to the fact that there isn't this big buffer of secondary supply that's historically has been available that they can lean into when you have these primary mine supply deficits, and that's going to, I think, lead to a rude awakening at some point. And one of the other big things is just the replacement rate contracting. We have not seen replacement rate contracting in over a decade. And really historically, when you look at this market, you need replacement rate contracting for the market really to kind of hit its stride and to see a very robust, strong market. And that begs the question again: where are we at in the cycle? Well, by that measure, we're still very early on. If you look at the mid 2000s through, call it 2011, 2012, post Fukushima, there were a number of years where we exceeded replacement rate contracting volumes, and there was a very strong market as a result of that. We haven't even gotten there yet, and so I think that just shows that we're still fairly early in the cycle, and that as we work our way towards replacement rate contracting, you're going to see the market gain even more momentum. And a big part of this, as I talked about earlier, will be, I think, utilities, having to pay up, right? They're gonna have to spend the money to buy those pounds from producers or near-term producers and developers, because at $70 or $80 a pound, it's just not attractive. Certainly not for a lot of the developers to go out there and raise the money and develop the mines. Uranium mining and developing uranium mines, as you and I both know, Andrew, is very, very challenging. When you look at the supply side versus the demand side, you've got call it 430 to 440 reactors operating currently. You've got almost 70 reactors under construction, hundreds more ordered, planned, and proposed. It's very easy, or relatively easy, to model the demand side, right? And when we talk about the new wave of demand, from small modular reactors, some of these advanced nuclear technologies, that's really icing on the cake. But when we look at kind of the core demand, it's relatively easy to model, which is unlike most other commodities, and it should make it easy for the market to determine a proper price and for real price discovery to happen. But when you look at the supply side, what's interesting here in the last number of years, the supply side is tenuous right now. I mean, there's, like I said, there isn't the secondary supply buffer that we've seen in previous cycles that's out there. Inventories have been drawn down. Underfeeding, right, is shrinking. We don't have a megatons to megawatts program that can bring new secondary supply online. And so really, we're now the market is relying on new pounds coming out of the ground. Well, as I said, uranium mining and developing and building uranium mines is very challenging. And we've seen numerous supply disruptions and curtailments in recent years from some of the largest miners, including Cameco and Kazatomprom. So, if any of the larger development projects are delayed at all, I think, again, this is going to trigger a flurry of new contracting and buying. And, bottom line is you've got a major structural supply deficit, a cumulative supply gap through 2035 of over 375 million pounds. You've got uncovered demand rising very quickly. In the next 10 years, there's over 1.2 billion pounds of contracting needed from the utilities that, again, as we come into a new contracting and procurement cycle, that's going to, I think, be the biggest driver for this market. And so things are lining up very nicely. Yes, it's great to see, headlines like we saw with the White House and the executive orders. That, the executive orders are, I think, it was a great headline, but I do think they will fundamentally change this industry, obviously in the United States, but globally as well. I mean, the executive orders are meant to revitalize the entire U.S. nuclear energy industry by fast-tracking new reactor licenses, overhauling the regulatory processes. These are measures expected to boost the nuclear fuel supply chain, attract private investment, increase uranium production, really to meet this new surging demand, particularly, again, from data centers and the AI industry. And they're talking about quadrupling uranium demand in the United States alone, right? Going from, call it, 100 gigawatts currently to 400 gigawatts by 2050. I mean, that's, call it 45 to 50 million pounds of annual uranium demand in the United States, going to almost the current global demand of about 180 to 190 million pounds. So, that is a huge increase, albeit, over a period of time. Even if it's a fraction of that amount, that's a big increase. You got to keep in mind, as the United States has basically been stagnant in terms of new nuclear capacity over the last 50 years. And so if again, even if we see a portion of that quadrupling over the next few decades, that's a lot of new demand that can come online. So again, great to see these headlines. The other headlines also with Meta, we signing the big power purchase agreement with Constellation, Amazon, and Talon. Last year we saw Microsoft and Constellation. These are 10 plus, 20 plus billion dollar transactions, very large power purchase agreements. The biggest companies in the world, the big tech companies, looking to utilize the only source of baseload emissions-free electricity to power their data centers, to fuel the growth of their AI industries. This is, I think the icing on the cake when it comes to this industry. I don't think it's a necessity for there to be a continued bull market, but I do think it's going to just pour fuel on the fire, as it were.
Appreciate you going through all that. Lots of different components. I'll just comment on a few things and we'll move on to Skyharbour. Definitely a lot of the headlines supporting the back end of this, if you will, the future curve, no doubt. Also, you and I have been here long enough that we've seen a lot of these goals and aspirations, and we know a lot of it isn't going to turn out to be what they say it is. But even if we get a small fraction of what is being discussed, that is a needle mover for this industry. On the S&D side, you're absolutely right. I think that the term contracting continuance and really replacement rate contracting, as you discussed, is going to be a very key driver for this market. And then I think where the market still is missing, again, is there's going to be a lot of production that's just not going to make it, or it's going to be delayed. And I think that also is yet to come even more. I mean, we've gotten plenty of indications over the last 18 months of production problems and talent problems and all these things, but I think that's going to continue. I don't see anywhere where that's going to stop anytime soon. And then it's funny, on the tech companies, it's funny how one jumps on board and the rest of them herd into this as well, trying to compete and do the same thing that the other company's doing. So that's interesting. It's not like this is a new technology, Jordan, but some of these groups are acting like it's the next best thing. Even though it's been out there and available for a long period of time. It's just that kind of realization and reminder that, oh, my competitors are doing this. I better jump on board the bandwagon as well. So I think that time in the sun is definitely starting to arrive. Well, why don't we talk a little bit more here on Skyharbour, jump into that now. The recent drill results. Jordan, you guys just put out some interesting results a couple days ago here. Just want to have you talk a little bit about those results coming out of the drill program at Moore Lake, which is one of the core projects for the company. Still work is ongoing there, but cover the results so far, as well as some of the key items on remaining work there to wrap up.
We just announced the last final batch of drill results from drilling that we carried out in 2024 at one of our co-flagship projects. That's the Moore Lake project. And very significant development in that we intersected high grade, so multi-percent, 3+% U3O8 or uranium mineralization in a very, very large step out hole from what we thought was the eastern extent of the high grade core of the deposit. So the hole that was the highlight hole, it was 6.4 meters of 1.5%. And within that, there was 4.74% U3O8 over 1.5 meters. So a very, very solid drill result. Not the best in terms of grade thickness that we drilled at the project. We've had grades as high as 21% over 1.5 meters. Last year, we had a drill hole that intersected 7.3% U3O8 over 3 meters. But I would say that this drill hole, as we highlight in the news release, is the most consequential drill hole that we've drilled at the project in a number of years, because it was a 42-meter step out from the eastern extent, again, of the high-grade core of the known mineralization at what's called the East Maverick Zone. We were not expecting to see this kind of mineralization at this target. We were expecting, quite frankly, at best to find kind of lower grade envelope mineralization, as we do see around the higher grade core. So this is now allowing us to remodel the deposit. And what we're now seeing and we're sure of is that the high grade core basically pinches and swells. The mineralization is concentrated around a graphitic conductor that's a conductive corridor, a 5+ kilometer long conductive corridor, and really only about half of that's been systematically drill tested. The mineralization itself is localized in a few different high-grade pods or lenses that can range from, call it 50 to 100 meters in strike length. And the idea is to basically prove up and find more of these lenses or pods along strike. And this drill hole now confirms that there is the potential for more high grade as we step out further along strike to the east. So a very significant development. It's, like I said, going to likely be the most consequential hole in terms of adding new pounds and expanding the resource. And it, again, provides assurance for us that we can continue to step out and systematically drill test this with the intent of discovering other additional high-grade pods or lenses of uranium mineralization that can help grow the resource quickly. So very exciting drill result and news release. Now this is a nice segue into what we're doing currently, why investors should be paying attention to Skyharbour right now. As we announced earlier in the year, we have set out this year to drill the most we've ever drilled in a single year. We'll end up drilling about 16,000 to 18,000 meters across both of our Russell and Moore Lake co-flagship projects, both of which are advanced stage exploration assets located in the heart of the Athabasca Basin. Basically, it's most of the property and ground located wedged in between the McArthur River mine, the richest uranium deposit and mine currently operating in the world just to the north of us, and then the Key Lake Mill, one of only 2 operating mills in the basin, just to the southwest. And directly adjacent to the west of our Russell Lake project is Denison's Wheeler River project, which we can talk a bit more about as we talk about our Russell Lake project and potential synergies there and the strategic location of Russell, given its proximity to not just the operations that Cameco has, but to Denison's Wheeler River project, where they're building what will likely be the next new producing mine in the Athabasca Basin. But our Moore Lake, getting back to Moore Lake, if you look on a map, you'll see it's adjacent to the east of Russell. So it's basically combined for one big block of property that collectively about over 250,000 acres of, again, very strategic mineral claims in the Athabasca Basin. So Moore Lake, as I mentioned, we just had the news out on that step out hole. We are going to be starting a summer program shortly, which will consist of about 5,000 meters at Moore Lake to follow up on the results that we just announced and some of the other drilling that we carried out last year. We're going to continue trying to add pounds at this Maverick corridor, but we're also going to be drill testing some of the regional targets. We've, in the last 6 months, carried out modern geophysics to refine new drill targets to the southwest along that same fertile trend that hosts the high-grade mineralization at the Maverick zones. There's another 5 or 6 kilometers. So we're now talking 10+ kilometer long strike length There's another 5 or 6 kilometers to the southwest that's historically seen very little drill testing. They just didn't have the drill targets. They didn't have the geophysical data to support drilling there. We now have that, and we're gonna drill at a few regional targets there. And again, we know that corridor is uraniferous. We know there's high grade mineralization there, so it really does kind of open up the exploration upside at the project. And a final note on Moore Lake is it's relatively shallow, so the unconformity and the targets are around 250 to 300 meters depth, which is interesting because there's 2 surface mining methods that are being used and or proposed in the basin, and those are Sabre and ISR, and that could potentially open up and help with the economics at what we have currently at Moore Lake, given it's within 300 meters of surface and it's predominantly sandstone hosted. These are smaller zones of high grade mineralization. So, a standalone underground mine, you'd have to find more pounds for that to be viable. But if you look at it again through the lens of mining it from surface, it becomes interesting as a potential satellite operation. And certainly as we see the uranium price tick higher. So a shallow, high grade mineralization, it's relatively cost effective as well to drill at Moore Lake. And one of the main reasons for that is the access to Moore Lake is actually from our adjacent Russell Lake project. And our acquisition of Russell Lake, just a final note too on Moore, we own 100% of Moore Lake at Russell, the adjacent Russell Lake. We've now earned in a 58% interest with our JV partner, Rio Tinto, owning the remaining minority interest. Access to Moore Lake is from Russell Lake, and so we are able to bring our drilling costs down at Moore Lake because we have infrastructure at Russell, the adjacent Russell Lake project, that makes it conducive to relatively inexpensive drilling. Our all-in cost at both projects now is below $350 Canadian, all in a meter. Now that includes everything from the drilling to the assays to the geologists to the camp to the fuel, all in. And to provide some perspective for that, most other exploration companies in the basin, and we have a pretty good finger on the pulse of these costs, given that a part of our business is prospect generation. We have other partner companies and exploration companies drilling. The all-in average cost for most other exploration companies in the Athabasca can range from on the low end $500 all the way up to $800 plus Canadian, all in a meter. So at sub $350 a meter, we get a lot of bang for our buck in terms of meters drilled. This year, with a total of 16 to 18,000 meters, as I mentioned, it's one of the larger combined exploration programs across those 2 flagship projects of ours. We also have another 15 to 16,000 meters that partner companies of ours are going to be funding. So in total, in Skyharbour, and investors in Skyharbour are getting exposure to over 30,000 meters of combined drilling across a number of projects. So we'll talk a bit more about the prospect generator business, but I think this is a good time to talk about Russell now, because Russell Lake, as we've discussed, Andrew, as you know, this is a newer project in our portfolio. It's a very, very strategic asset, as I mentioned, given its location. Again, you've got McArthur River to the north, Key Lake to the southwest, but importantly, you have Denison's Wheeler River project adjacent to the west, Russell. And if you look on a map, Russell effectively surrounds Denison's Wheeler River project to the north, to the east, and to the south. And so a lot of the fertile uraniferous conductors, the structures that host the high-grade mineralization in the basin and on the Wheeler River project, they actually trend right on to our Russell Lake project. And a big part of the strategy, the exploration strategy that we're following here at Russell has to do with testing the extension or the continuation of these conductors onto our Russell Lake claims. And we can happy to talk a bit more about that if you want. And I want to hand it back over to you for any other specific questions you may have.
Yeah, Jordan, thank you for going through all that. Lots of stuff happening here. With respect to remaining assays, what would you expect on timing there? I know there's been some delays up there in Canada, but maybe you can talk about the timing of that, and then also talk a little bit about the timing and sequencing for both the work coming back to Moore and also at Russell. Just talk about the timing on that and what you would expect as far as news flow over the coming months.
We still have the final batch of assays from the last bit of drilling, which we carried out late last year, towards the end of last year at Russell. So we're expecting those back soon. The good news is we've been in contact almost daily with the assay labs, and it's been most companies, as I'm sure you're well aware, in the basin. There was a huge backlog of assays, so that the turnaround times were, went from 5 or 6 weeks to, in some cases, 5 or 6 months. They've rectified that. They've expanded their capacity, hired new people. So we're expecting the turnaround time this year to revert back to a reasonable turnaround time for the assay. So the good news is that we'll likely see a very steady flow of news and assays from both Russell and Moore as we get through the rest of 2025 into 2026. And again, the 16 to 18,000 meters that we're drilling, to answer your question on the sequencing of this, the first phase of that drill campaign we're just wrapping up at Russell. This is an initial 5 to 6,000 meter winter spring drill program. So that'll wrap up. We're very, very happy with what we're seeing. As you may recall, last year we did announce for the first time at Russell high-grade mineralization in drilling that we carried out at what's called the Fork Zone. We intersected 3% over a half a meter in a brand new target just a few kilometers away from Phoenix. So it's all, again, as I mentioned earlier, quite close to Wheeler River. And this new target, which was very poorly understood because it just so happens to lie basically right underneath the power lines that service the McArthur River mine. So it is interfered with the geophysics, and it makes it very challenging to garner drill picks. As a result of that, we've since done some more modern geophysics and some new geological modeling to better understand the target. And after we intersected that mineralization last year, and so this first phase of drilling is essentially following up on that high-grade mineralization that we discovered last year. And so a lot of that first phase, the meterage was dedicated or is being dedicated to that. But we're also testing some other targets, again, fairly close to the border with the Wheeler River, and in particular, a couple targets that more exploratory in nature, less drilling historically, up on the northern end of the Russell Lake project. And these, again, are targets that we feel warrant a lot more drilling, especially given that they are the same conductors that trend, again, in this typical northeast southwest pattern from the adjacent Wheeler River project. And just within the first few holes that we drilled at this northern target area, we call it the Fox Lake Trail target, we're already seeing alteration and indicator mineralization very, very similar to what you see at Wheeler River at numerous zones of mineralization that they have on the project. And that makes sense. Again, it's the same geological setting, same conductive corridors. So we're very excited with the initial findings there. And again, assays are pending from the first phase that's been completed thus far. We will be wrapping that up, and then we'll be moving the rig over to Moore Lake again, as I talked about, drilling 5,000 meters there, following up on the results that we just announced here recently and testing some of the regional targets. And then we will move the drill rig back to Russell, probably sometime in September, October, and wrap up with another third phase, final phase of drilling, which will consist of another 5,000 to 6,000 meters of drilling at Russell. So basically, it's unique in our case, given that we've got the infrastructure there, road, power. We've got an exploration camp at Russell that we've inherited from Rio Tinto. In fact, that allows us to generate a little bit of revenue. We can rent it out to other companies operating in the area, but it brings our cost down quite significantly. Again, I mentioned the all-in Canadian sub $350 a meter at these projects, but we also get to drill basically year round. So instead of being confined to the summer and winter drill seasons, we are typically drilling through the shoulder seasons, given that we've got targets that are proximal to infrastructure, and most of them are on high ground, so we're not having to deal with lakes and bogs and swamps. And so we get a lot of bang for our buck when we raise money. We were fully funded and permitted for all of this drilling in 2025. We raised money late last year, $10 million that, again, funds us right through this year into 2026. And a quick note on that was predominantly subscribed to by a handful of strategic institutional investors, both on the flow through and the hard dollar component, as well as Denison coming in as one of the lead orders on the hard dollar component of the financing. Denison, as we've discussed in previous interviews, as you mentioned earlier, is one of our 3 larger strategic partners. They've remained our largest corporate shareholder for the better part of the last decade now. Their president and CEO, Dave Cates, is a director of Skyharbour. And so again, just talking about the importance of the location of Russell relative to Wheeler. I mean, again, this is a big chunk of ground that is north, east, and south of the Wheeler River claims, and there's there's a lot of potential synergies there. We have a great working relationship with Denison, with Dave and the team, and again, a lot of the targets that we're drill testing are targets that are relatively close to the border that we share at Russell with Wheeler River.
The costs are good. I really appreciate you outlining that, and folks can do their own work as well on comparing some of those numbers that Jordan gave, but definitely very good exploration costs here, Jordan. With respect to the potential for production, Jordan, because you have some different options, there's different technologies. Obviously, Denison at Wheeler River is proving up ISR technology in the basin. Talk just a little bit about how you would look at that going forward and how you guys would approach that. I mean, there's different options. You guys have relationships with all the bigger groups. What do you think would be sufficiently viable to approach some type of putting economics and a production profile around what you guys do have, or what potentially could come from some of these regional exploration targets? Just preliminary. I know this is very early days, but just talk a little bit about what you think would work in terms of maybe size and scale, and maybe what the options would be and how you guys would approach that.
Yeah, just before we get into that discussion, I would just emphasize that Skyharbour is an exploration company and a prospect generator. So at this point, the real value driver for us is through the drill bit, whether it's at our projects or partner funded programs. It's through property transactions, right? Our prospect generator business. There's a number of other key value drivers here. Obviously, the uranium market improving, is as it would, positively impact other uranium companies, will impact our price and valuation. But, we do keep that question in mind when we, to a certain extent, when we are prioritizing targets. It's, one of the things, it's great, obviously making a big discovery in the basin is, that's where you get the biggest move in terms of, return. And that's what we're after. We think we're in a unique position as one of the leading advanced stage exploration companies in the basin to deliver that this year and next year at our Russell and Moore Lake projects. But we do keep that in mind when, in particular at Moore Lake, for example, where there are pounds, high grade pounds there, relatively shallow, predominantly sandstone hosted. So for the drilling, expansion drilling and the budget that we've allocated to Moore Lake this year, absolutely we're thinking, if we can find additional pounds that down the road could be amenable to Sabre or ISR, or some other, more economically viable mining method, that's absolutely something that we do consider and we factor in, especially in the case of, a Moore Lake at the Maverick zones of mineralization where, we're basically now expanding, an existing small resource and trying to add as many pounds as we can. Now at Russell, we do consider it, but at Russell, first things first, we need to find a deposit, right? We need to make a meaningful discovery. There's widespread mineralization at numerous targets at Russell, but it's all about right now vectoring in on a deposit, finding something that is going to create a lot of value in them, unlock a lot of value for us and our shareholders. I don't need to go over the return potential on high grade uranium discoveries in the basin. Your listeners are all familiar with the next gens, the ISOs, the fissions, more recently F3 Canalaska. You've got even Denison previously, right? I mean, these are potentially multi-billion-dollar high grade discoveries, and so at Russell for us, the focus is finding a new deposit. But yes, absolutely, we're thinking in terms of, I highlighted the fact that the proximity of Russell and where we're drilling to Wheeler River, that's an important part of the strategy. We'd like to ideally find a deposit that is, close to other operations and infrastructure, and could potentially be amenable again to a lower cost mining method. So it plays more into the strategy and the planning around the drilling that we're carrying out.
The key highlight here was to indicate also that as an exploration company, you guys have the ability to go and sell a project or a portion of a project or an interest in a deposit or what have you is obviously the first and foremost value concern here. If you guys can monetize certain things that you come up with, I think that obviously makes sense. I'm not sure you guys want to be a producer or anything like that. And of course, the whole point here was to indicate that you guys have already good interest of good partners already involved in the company. And if you guys can continue to demonstrate on some of these projects that some of these could be monetization events for the company. So I think that's good stuff here to highlight to the audience. With that, any other comments on that matter? And then also, I guess while we're on it, you talked a little bit on the money side. I did want to ask, so it looks like the company's fully funded for the rest of the year. Touch briefly on cap structure in terms of where we are on that shares outstanding here. And then also with that, I think this is another important piece, the expected incoming capital from partner agreements, maybe anything on that front that you see coming in, as well as to highlight for the audience, some of the folks are new, the current insider ownership and the key institutions.
Yeah, sure. So a lot to cover off there. So the capital structure currently, we've got 204.5 million shares issued and outstanding. Trades around a $70 million Canadian market cap. As I mentioned, we're fully funded from the financing that we carried out last year. We've still got well over $6 million in the treasury. We do receive money from and shares from our partner companies. We typically receive between $1 million to $2 million in cash and stock a year. We've just in the last few weeks received relatively large share payments from a number of partner companies. As we've talked about in the past, this is, as a part of our prospect generator business, has been a nice boon for our company in that it's alleviated the need to continuously raise, in particular, hard dollars to fund G&A, to fund acquisitions, additional property acquisitions and staking, and has allowed us to effectively just resort in most years to raising charity flow through dollars at a high premium to the market price. The shareholder base notably has shifted from predominantly retail, 6-7 years ago, to a nice mix now of retail, institutional, corporate, family office, strategic. So we've got, as I mentioned, our two larger corporate shareholders in Denison and Rio Tinto. We're in all of the major uranium mining ETFs as well. And then a handful of a number of institutional investors that have typically come in on financings, well-known uranium funds or uranium-centric investors, institutions, family offices that kind of round that out. And then the management and insiders, we've maintained about a 4 to 5% interest in the company. You can see with our insider filings, we've been buying shares in the open market, especially on pullbacks. I've added significantly to my position in the recent years. Dave Cates, who I mentioned earlier, he's become the second largest shareholder personally within that insider group. And just a quick note too, we have added to our team in the recent year. We brought in a gentleman by the name of Sidar Donmez as our new VP of Exploration. So he's going to be working with our geological team based in Saskatoon going forward, basically running the drill programs, planning, strategizing, and he's a notable addition because he spent 17 years at Denison Mines. He was project geologist at Denison, and he was at Wheeler River when they discovered Phoenix and Griffin. He was there right through to the feasibility study just a few years ago. He left. He then was at a few other companies, 92E and then Atha. He joined us full-time late last year, and I think a major addition to our team, given his history, his past. I think it's a testament to what we're doing. He really liked what he was seeing last year at Russell and Moore Lake, projects that he knows well because of his time working in the area at Denison, and saw the numbers that we were coming out with in the early drilling that we carried out last year, really liked it and joined us full time, and has been a huge addition to the team. And so, we've been kind of bolstering not just the corporate side of it, but the geological side of our team, and attracting notable talent. Now, as far as prospect generator business goes, and again, we do generate a little bit of cash flow each year from this, as the partner companies have to make cash and share payments to us as they earn in at the projects. Just a quick kind of summary of that business. So in Skyharbour, the entire company, there's 36 projects covering over 1.5 million acres. So we're the third largest mineral tenure holder in northern Saskatchewan. That's been building up that project portfolio for a number of years. Of the 36 projects, 2 of the projects we talked about, Russell and Moore, those are our flagship projects that we're advancing. And then another 13 of the 36 projects are currently either under option to a partner company or are under a joint venture partnership that we've now formed with a partner company. And so there's 9 partner companies advancing those 13 other projects in our portfolio. 3 of them are joint venture partners, Orano, Azincourt, and Thunderbird. The other 6 are option earn-in partners, meaning they're having to fully fund all of the exploration and make cash and share payments annually to Skyharbour to complete the earn-in of the majority interest that they can earn into in those projects. Now, of those 9 partner companies, assuming they all complete their earn-ins, that's over $70 million in combined project consideration. So about half of that in exploration funding, and the other half in cash and in share payments coming into Skyharbour from these partner companies. Again, this is assuming they all fully complete their earn-ins. The 9 partner companies, we're expecting programs, exploration and drill programs from most of them. Most notably, Orano, another strategic larger partner of ours and a JV partner at our Preston project, will be commencing a 6,000 to 7,000 meter drill program at the Preston project this summer. This is a very exciting program. We're participating as a minority interest holder in the project, and this is a very large drill program at that project. This project's over by NextGen on the western side of the Athabasca Basin. In fact, we share a border, a long border with them, and you'll see on the map number of the conductors, the main targets trend from NextGen's ground to the north onto Preston. So we're very excited for Orano as the operator to start that program, and we're looking forward to news flow from that. And then outside of Orano, we've got Terra Clean Energy. They've just completed a winter program at our South Falcon East project. They're earning in up to 75% there. That's a $22 million earn-in option that they're working their way through. They're planning a summer program as well. That project is one of our other advanced stage exploration assets. It's host to a small resource at surface that they're looking to expand and make new discoveries at. So that's definitely a partner to keep an eye on, as well as North Shore at our Falcon project. They're planning some drilling here shortly. UraX at South Dufferin, they're planning to drill before year end. And then Hatchet and Mustang, both Mustang's just completing a small field program, and Hatchet is planning some field work at various other projects that we've dealt to them. So 9 partner companies spending a lot of money, again, generating a lot of additional news flow, adding another 15 to 16,000 meters of drilling to the, call it, broader Skyharbour portfolio of projects and programs. Also, we get a little bit of cash in stock. It's a very nice, thing where you can say to investors, look, we've got these partner companies. They're advancing these secondary and tertiary projects. You're getting some exposure to those programs, but you're also getting some direct exposure to the company itself through our equity ownership. We'll typically hold a meaningful equity position in these partner companies. So investors do get some exposure to a portfolio of smaller companies, explorcos in the basin, through owning Skyharbour shares.
Jordan, I was just going to talk to you a little bit about Orano, and you covered off what they're up to. And then I was going to talk some of the junior partners, and you covered those too. So thank you for that. I think this portion of the business is important for the audience to understand. If you just had, 1 or 2 partners, that's one thing. And it depends on the project and the size of these deals, but you guys truly have a portfolio and a large land package. This piece of the business is important. It really is meaningful now because you guys have such a large portfolio and a lot of partner companies, a lot of things happening both on the ground with field work, but then also you have equity positions in all of these, you have cash payments coming in, and it's meaningful at this point for the company. So it's a notable thing that you've put together, and it's taken a long time to get this all put together, and it's really showing size and scale now. So I appreciate you walking through that. Well, Jordan, short of anything else, I think we've got everything here that I wanted to cover. Was there anything else you wanted to add before we wrap up?
No, I think we've covered all of the main talking points. I'd say, just as a kind of wrap up summary for us, for Skyharbour and our investors, this is a pivotal year for the company. We decided late last year to be a little more aggressive this year with our exploration and our programs, in particular at Russell and Moore. We were seeing what we wanted to be seeing last year, so that led us to raise a little more money than we were initially planning to, and we decided to go into this year and be as aggressive as we can be. And I think that that's going to pay big dividends, especially as we see the uranium market I think enter into its next phase, its next leg up. We're uniquely positioned as one of the few remaining advanced stage exploration companies, pure play Athabasca Basin exploration companies, meaning that we're in that 50 plus million to, call it, sub $300 million market cap range. There's only a few companies in that bucket, if you will. So from an M&A standpoint going forward, I think we're in a good position to potentially transact. That's what we're working towards, but I think that becomes a very plausible outcome on the back of exploration success and improving market conditions. We are also uniquely positioned through, again, this prospect generator business, which allows us to be one of the most catalyst-rich companies in the Athabasca Basin. As I mentioned earlier, over 30,000 meters of combined drilling between us and our various partner companies across a handful of projects scattered throughout the Athabasca Basin. And we're not having to fund all of that. So we're keeping the equity dilution down, yet we're offering exposure to a lot of drilling and a lot of exploration upside potential. So there's a lot to look forward to. A very exciting year for us. We're working our way through the initial phase of drilling at Russell, moving the rig over to Moore, then back to Russell. We've got a number of partner companies that are kicking off summer drill programs here shortly. As I mentioned, Uranium most notably with a large 6,000 to 7,000 meter program. And so you're going to see a lot of news flow between now and year end and going into next year.
I think the audience understands now that the company is funded for the rest of the year. You have an on-market opportunity, and you also have the opportunity to contact the company directly. Potentially, there's an opportunity down the road when the company finances again to potentially look at investment via that method as well. Jordan, with that, for further information, how can potential investors reach out to the company?
Yeah, so the best way is just simply go to our website, www.skyharbourltd.com, and all of our contact information is on the website. I'm always available, happy to chat with anyone. Our investor relations manager, Nick Cultura, his contact info is on there as well. So please feel free to reach out.
Jordan, always good to have you back to update, and looking forward to seeing more results come in. Thanks for the time, and looking forward to having you back in the coming months to update.
Thanks, Andrew.